introduce myself. My name is Anindita Marisca with NPM 22,411,036. I will explain about the tax collection system, tax rates, tax functions. Tax collection system. A tax collection system is a method or way used by a country to collect taxes from its citizens. There are several main systems in tax collection. Official Assessment System, OAS. In this system, taxes are calculated and set directly by the government. The government determines how much tax must be paid, and taxpayers only need to follow the provisions that have been set. This system tends to be easier to control, but is often considered less transparent because taxpayers only receive the amount set without doing their own calculations. Self-Assessment System, SAS. In this system, tax calculations, payments, and reporting are carried out by taxpayers themselves. Taxpayers are given full trust to calculate their taxes correctly, then report and pay according to the rules. This system is widely used in modern countries because it is more transparent and empowers taxpayers, such as in Indonesia. However, this system also requires high honesty and compliance from taxpayers. Withholding system. In this system, a third party, such as an employer or company, acts as a tax withholding agent and deposits it directly to the state. An example is income tax, PPH, which is directly deducted from employee salaries. This system makes it easier to collect taxes, especially for workers whose income is already fixed. Tax rates. A tax rate is the percentage or amount of tax imposed on a particular tax object. There are several types of tax rates that are commonly applied. Fixed rate. At this rate, the amount of tax paid remains the same, regardless of the value or number of tax objects. A simple example is vehicle tax in some regions, where the nominal tax remains the same for each particular vehicle. Progressive rate. This tax rate increases as the value of the tax object increases. The higher the value of the object, the higher the rate imposed. An example is income tax, where people with higher incomes pay a higher percentage of tax. Digressive rate. At a digressive rate, the percentage of the tax rate decreases as the value of the tax object increases. This rate is rarely used because it tends not to encourage tax fairness. Proportional rate. This rate remains at the same percentage, regardless of the number of tax objects. An example of the application of proportional rates is the value-added tax, VAT, in Indonesia, where the rate is constant at 11% for almost all goods and services. Tax functions. Taxes have several important functions that provide benefits to the state and society. Some of the main functions of taxes are: budget function. This function makes taxes the main source of state revenue. The taxes collected are used to fund government spending in providing public services, such as infrastructure development, health services, education, security, and other state needs. Regulatory function. Taxes play a role in regulating and controlling people's economic behavior. For example, the government can impose high taxes on luxury goods or cigarettes to control consumption and distribution. Thus, taxes function as a regulatory tool to influence consumption and production patterns in society. Income redistribution function. Taxes help redistribute wealth in society to make it more even. Taxes collected from the public, especially those with higher incomes, are used for social assistance and development programs aimed at the less fortunate. This is the state's effort to create social justice. Stability function. Taxes play a role in maintaining economic stability. By regulating tax rates, the government can control inflation and reduce economic inequality. When the economy heats up, the government can raise tax rates to reduce excessive consumption and investment. Conversely, during a recession, the government can lower tax rates to encourage consumption and investment. Conclusion. Overall, taxes play a vital role in supporting state operations and creating balance in the economy. With a fair tax system and rates, the state can create social justice, economic stability, and direct society towards healthier and more appropriate consumption patterns. Taxes are not only a source of funds, but also an important regulatory tool for the government in managing the economy and society as a whole.